Hello, welcome to today's Delta Credit Tip. So you filed bankruptcy, you've gone through the whole process, you've got the discharge, now it's time to rebuild. How do you do that with a bankruptcy on your credit report? Well, stay tuned, we'll fill you in on today's Delta Credit Tip. Hello YouTube fans and welcome back to today's Delta Credit Tip. So you've filed bankruptcy, you've gone through that whole humbling process, right? You've gotten the discharge, you've paid the money, you've put in the time. Now it's time to rebuild. Now there's already the conundrum of how do I build credit when I have no credit, but now it's become how do I build credit with bad credit on my credit report? That's a very difficult thing to do. So we're going to explain how that works in this video. Hopefully it'll be very helpful to you. If so, give us that thumbs up. Don't forget to subscribe below, hit the bell so that every Thursday when we come out with new information on how you can help yourself with your credit restoration process, you get that information right out of the gate. Right? Not to mention, share the information. Okay, there's other people's out there like you, just like you, who have gone through this process and are wondering, how am I going to rebuild my credit? If you've got friends, you've got family or co-workers, share this information and hopefully it'll help them too. Right? So let's talk about that. You filed your bankruptcy. You want to rebuild. What are the steps that you have to take to get yourself back to good graces with the banks? Okay, and I want to preface this entire conversation with recognizing the fact that we at Delta Credit Restoration define credit very differently than I think a lot of the other credit repair companies. And for us, credit is not a score. Your credit is a behavior that leads to the score. Okay, so just kind of keep that in mind as we go through the video. Okay, now the first thing we want to talk about is the first step that you want to do when you come out of bankruptcy and everything has been discharged. About 30 days after is when you want to start this process. And you want to first pull your credit. You can get it from annualcreditreport.com. You can get it from all these different retail websites that you can go to. I know financialtoolshed.com has some resources that you can go to pull credit reports. So first go there. Okay, make sure that everything that was included in the bankruptcy has been updated appropriately by listing that they were in there, that the debts have been discharged, that the balances are at zero, so that we're basically starting off with a clean slate on the credit report, at least being debt free. Okay, so once we've pulled our credit and everything is being read accurately, or at least you've now started that process of disputing to make sure that these things are accurate. And again, if you need to dispute with the bureaus, we've got a video on that. You can go back and check that out and make sure that those videos, that those trade line items are reading appropriately on your credit report, right? So that's the first thing to do. The second thing you want to do is you want to establish a budget. This is by far the most paramount thing that you must do after coming out of bankruptcy. Okay, it's super important for a variety of reasons. One, just because you filed bankruptcy, it doesn't mean that you're financially in any better position than you were prior to the bankruptcy. If you weren't paying your debts prior to the bankruptcy, well, not paying them now isn't going to really change your financial situation. Okay, not to mention, you may be in a position where a special event caused you to file that bankruptcy. And people come to us all the time and they say, well, the only reason why I filed bankruptcy is because I lost my job, or I got hurt, or I got divorced. Well, in today's day and age, who doesn't, right? The question becomes, are you prepared for the inevitable, right? And it starts with that budget, right? So the first thing we want to do is we want to establish a budget. And your goal is to create financial safety nets. For us, good credit means that you have 4 financial safety nets in place and are either financed or are being financed on a month-to-month basis. The first is you want savings, and you want to accumulate 3 times your core in savings. So your budget needs to be able to produce that. And your core cost of living are 5 transactions: rent or your mortgage, utilities, food, your gas for your car, if you don't have a smart car or a hybrid car or whatever they are, and last, your car note. Okay, so those are your 5 transactions, your core transactions that if you had lost your job and had money in savings, that's what you would spend your money on. That's your core cost of living, and you want 3 times that in your savings. That's your long-term goal. The second financial safety net is you want to have available credit. We're going to work on that because we got to establish some credit first. We'll get to that next. Okay. The third thing we need to do is we need to make sure that you're properly insured. That means you've got medical coverage. That means that if you've got children, you have life insurance. That means if you own a home, you have homeowner's warranty insurance. So those things are important because they protect you against life events that could cause you to have bad credit. Again, it's a financial safety net. The next financial safety net that you want to have is that you want to have investments. They could be in your 401k. They could be in other property. They could be in a mutual fund. There's got to be something working on its own to help build your wealth for long-term needs. Okay? Those 4 financial safety nets, we want that to be part of your budget. You need to somehow include that in there. Now, the whole thing about a bankruptcy, remember, is that it's kind of a restart button, right? There's no point in restarting and doing the same thing that you did prior to the bankruptcy. That's why this step is so important, is because it will create these financial safety nets in a different way that was you probably had before, so that you are protected again against the inevitable. And when they do happen, you're able to have what I call financial buoyancy in times of financial trouble. Okay? So again, create that budget. And if you have issues creating a budget or you don't know how, give us a call. This is something that we help all of our customers with, or seek some sort of professional help from a CPA or a financial planner or someone who's trained in that area. Okay? Maybe even a banker, maybe. Okay. So that's the second thing you want to do. The third thing that you really want to do is start beginning to, like I said, create those financial safety nets and make sure that they're financed every month. The budget will give you the capacity to do it. Then in that budget, you start to create them. I don't care if you're saving $5 a month. Okay? Those things need to happen. Okay? Now, the fourth thing that you want to do is start to get revolving credit. Okay. Now, obviously, with bad credit on your profile, getting new credit is a little bit difficult. But the funny thing about credit cards is that they know that you cannot refile in at least 8 years. So as soon as that bankruptcy discharges, you will be bombarded with credit card offers. Okay. So you need to thumb through those, see which ones you may qualify for that are geared toward people that are in your predicament, right? Or go for what they call a secured card, where you give them the collateral and then, cash collateral, and then they will give you a card equal to the collateral that they gave you, right? This is a very important step. You want to do this as soon out of bankruptcy as you possibly can, because that's really what lenders are looking for. When a lender looks at your credit, some lenders are going to have a certain fixed amount of time that they will not lend to you because of how soon it had been since you filed. But once you hit that benchmark of time, what will determine whether or not you are lendable is what you've done from charge off or discharge, I should say, to application. So it's super important that you've got established positive credit. And we recommend either a credit card that's geared for people building their credit, or a secured credit card, which seems to be the most likely to be approved for. Now, when it comes to secured loans, not a big fan of those. The reason why is you're going to pay a lot more interest than you will with a credit card because, of course, with a loan, no matter what, until you pay it off, you're paying interest. On a credit card, the effective rate, in other words, the rate that you pay, is in effect 0 if you pay it off at the end of the month. Okay? So you don't have to have debt to have credit, and you want to use those credit cards to help build, right? Start that payment history, making sure that the balances on those credit cards are below 30%, right? And doing those behaviors, right, that will help you establish that credit score that you're looking for, okay? Now, if you had debts that you either A, reaffirmed, or B, did not have the ability to discharge, like court fees, child support, student loans, those sort of things, you've got to make sure that you're paying those things on time. A 30-day late on anything after a bankruptcy is basically the kiss of death for a loan. You've got to make sure that the positive stuff stays positive. Okay, so if you reaffirm that car, you reaffirm that house, or you're starting to pay on those student loans, you got to make sure that you're doing it consistently, you're doing it on time. Right? That's super, super, super important. Okay. Now, the last thing that you might want to look at is what they call alternative credit. And this is a more popular thing. Alternative credit is there are certain companies that will report your rental history or your utility payments. Those are options, but they typically cost money, and not all lenders will really accept that kind of credit. So kind of take it with a grain of salt. Don't spend too much money, but it is an opportunity to at least get the momentum started on the score. All right. So those are 6 different ways that you can help rebuild your credit very quickly after bankruptcy. We've had people that are pretty much in the high 6s within 6 to 8 months after bankruptcy. And there are some lenders that will lend to you literally a day after bankruptcy. It's not what it used to be, right? It's a tool for people to go out and take risks and take chances, like business owners and homeowners, to have something to fall back on to hit that reset button when they need, all right? So don't run from credit. That's the last thing you want to do when you come out of bankruptcy, because when you need that credit to buy that next home or buy that car or to start that business or to get that insurance policy, right? You want to have that credit rebuilt, right? So again, hope this information helps. If so, give us a thumbs up, subscribe, hit the bell so that every Thursday you get that information right out of the gate. And again, if there's someone that that this can help, share that information. Okay. We've also got a couple of videos that we've just done all around the bankruptcy topic about reaffirmation and what bankruptcy does to your credit. So go back, check those videos out, comment below with anything that you'd like us to maybe give you some feedback on, and we'll see you next time. And in the meantime, make a choice, make a change. Delta.